In the metals quadrant, a small gold recovery in the April gold contract. Gold was down over 2% on the week, but ended up finishing down only a little bit more than 0.6%. This is now the second consecutive week lower for the precious metal, but today ended the session with gold a little bit higher by almost 0.5%. On the lows today, gold was down 41 basis points or 0.4%. But on the high, gold was up 61 basis points or 0.6%, on the way to finishing the day up almost 0.5%. So all things considered, gold probably had a good day on the back of risk assets selling off, which brings us to why risk assets were selling off in the first place, and that's the potential for reflation. Today's PPI print, which came out higher than expected at up 0.3%, as well as being higher than last month's reading, helped to support the hot CPI print that we got earlier in the week. Now, people are always talking about gold being an inflation hedge, but what gold is an asset. And if we're getting reflation or more inflation, as long as the Fed isn't increasing rates from their current level, that will help assets in general, stocks and gold. Now, that didn't happen today because what's happening right now is the market starting to take out rate cuts. So if the rate cuts are taken out, that hits stocks a little bit, but didn't necessarily hit gold, although it could end up hitting gold if we go from the previous stance, which was 7 rate cuts, to what the market's pricing in now, which is only about 4. If it goes to 0, gold will probably take a hit as well. But if we get more inflation and rates stay stable, gold could benefit from that on the back of being an asset that increases with inflation. Also, we've got U.S. Treasury yields rising double digits for the second consecutive week, especially on the front end, which points more to Fed policy. Now, that is probably a headwind for gold, and it's likely the reason that we ended up with gold finishing down on the week anyway.